Hello. Well, let's do something a little different this time. Rather than a market review, I'm going to bring a series of videos in which I'll break down the setups I've seen during the day, or the most interesting setup that I want you to understand. So rather than describing the market itself, looking at areas, seeing all that, which should already be clear with the market review, what I want is for you to understand what goes into forming a setup, how the narrative is built to go into a trade, and as each thing happens with the price, what can I expect? Alright, so let's do it with today's price action, Friday, August 30th, which was quite nice. It was very similar to the last review I sent you. In fact, all of this that we're going to see here first, before going to the setup that I'm going to explain to you, you're going to see that it has a very big similarity with this. So, well, I usually arrive at the opening, although this week I've been arriving a little later. But what do I do then at the opening? I quickly place myself on the chart, look at what Asia did, what London did, and where I am on the price before the opening. Well, in this case, Asia and London made an upward trend movement which, in many cases, I don't have an exact percentage to give you a figure, but cease to know very well from my own experience that when these types of trend movements occur from Asia until New York opens, there is a high probability that some of this market trend will be absorbed during New York hours. In fact, this happened the previous day too, and then in the afternoon, part of it gets absorbed by the market. This happens quite differently. When the market moves in Asia in one direction, it touches something, then in London it comes over here. In those cases, if one cannot make a direct move with some bias in New York, but whenever you see this, if we are in a valid area to short this, it is quite likely that it will be given to them. Obviously, nothing is done blindly, everything with confirmation. So, we get here at the opening, and I see that the price is reaching this area here, to this area that remained from the previous day. Well, this is generated from the previous day's opening as well. Important zone, opening zones, high impact news zones. All of this is important because we know there is volume behind it. So, what do I have in my high time frame? That the price is reaching this origin. Well, then it's a potential area to look for shorts. Now, what do I have already mechanized in terms of time? I roughly know at what time certain candles are closing, and at 10 they start forming. The previous 4-hour candle closes, and the next 4-hour candle starts forming. Well, so, if we see this from a fractal point of view, what's happening here is that the price is coming here to close the 4-hour candle. Now the next one. And what would it be doing to me? Then, when it makes all this movement, when it makes this movement, let's omit that. When it makes this movement and takes out this wolf, it leaves me with a 4-hour candle pattern, right? Here, seeing it from a fractal point of view, it's a 4-hour candle pattern, so I know it's an origin of a higher time frame, because I insist on this 4-hour thing being here in 5 minutes, or seeing it every 15 minutes, which in fact starts to become even clearer. This is here, and the price is coming here. And here I came for this, because I insist on seeing it in a larger time frame. Because in these types of scenarios, there are many people who don't know whether to take this, take this, take this, take this. When the area looks like this, which doesn't give a clear indication of a person responsible that aligns over various time periods, because this person can be responsible in this time period, but this one may be seen in a larger time frame, and there's no clear origin for this one, because this high didn't take out this high here. Our swing points are this low and this high. This is the lowest point, and this is the highest point within this entire range. So this is simply an internal swing. So when there are all these kinds of things, people don't really know what to take. But if we see it from a fractal point of view, it's simply the flip pattern in 4 hours. Candle pattern in 4 hours opens the next candle with this low goes and sets a new high. Therefore, we already have a valid low to flip. Remember that flip or candle pattern is not equivalent to structure in a time frame. It is a change of structure in a lower time frame. Yes, but for the candle pattern we can see it with wicks. Well, so we already have a low that set a new high to clear the low. We already know that what it did in 4 hours, the price came to make a low, clear the high, and clear the low. So there's the flip. And the price just gets to its 50% here. Well, so here we are today, Friday, at the opening of New York. So what the price starts to do here, reaches the opening, swipes to the high, and starts to drop. And we start to make a small upward structure. It starts to make new higher lows, higher highs, higher lows, higher highs. And once it reaches that 50, there was also a medium impact news about consumer sentiment here, which helps us, leaving us responsible for taking that swing. We have this responsible one here. We have this responsible one touching the swing. The 50% we just saw there, and two things happen here. A reversal is made to the movement of news, which is not high impact, but works in a similar way. It helps to accelerate the targets, and when a reversal is made to those movements, it means that the target the price was aiming for has been achieved. Well, the news completely speeds up what the price was already going to do. So, the target is met, and a reversal is made to that. And what happens then? We have a person responsible here who leaves the first high as an inducement. Obviously, I don't enter at that point. I didn't get a tap or anything, But what happens when it touches the area and gives me a reduction? At this moment, I have to think that my optimal point for entering will be here after taking this high. This is the first thing I need to be thinking about once that just happened here occurs. If the price reaches 50, which is ideal, and gives me a pattern to enter to make a first scalp. But I always like to take everything on the second touch. Sometimes I'm aggressive on the first one, but when I am aggressive, I do it when the tap is at 30 or 50. I take this here as an inducement that we're going to suit then. So well, what happens? I'll see what happens here next. We managed to sweep that first up. And here is the first entry I made on another platform with another pro firm. Open parenthesis. This platform that I am testing is from a recent pro firm that caught my curiosity, and honestly, it's the best I've been able to try. 1 hour. Now it is the best platform you can try. I just started this week. Well, exactly on Friday. And it is like a combination of TradingView with the best of TradingView, the best of NinjaTrader, the best of Trader. In other words, perfect executions in good time accessibility to drawings and everything that TradingView has. And the thing about the data from NinjaTrader, I can go to any data in seconds in super extensive ranges. It has absolutely everything, and even more. It really has everything. It even has copy trading. It has everything on this platform. So you'll most likely be seeing the rest of my content here. Since on NinjaTrader I use a more opaque background, and I've seen that it's difficult for several people to see. It's good this trade, since I already took it on another platform, in other accounts. I'll show you the setup I took on this one right now. So the price arrives here and starts rejecting the high even in 5 seconds, which is a very good sign for me. And what happens here, precisely going into detail with what we have here, we have a small responsible for having swiped this high. And look how here, the low is taken out from this small fractal in the responsible fractal. Here, the low is taken out. It's wicked from this other contrary candle. You know that in 5 seconds more than anything, I don't focus on small fractals. I try to at least have contrary candles in the movement. So I have this responsible, and I would have the bullish candle that was in charge of giving that impulse to take out. Said, responsible. So what happens here? At this point, I can say, all right, the price is going to do this sweep to this low, and it can still give me the possibility of a double bottom for continuity. That's what I have to be thinking here. I don't want to rush in. So, in the order flow video, where I explain how a potential reversal starts, the sweep or tap to something happens, then the price comes, it will test in this case something bullish to see if it continues. It doesn't succeed, then it will take out that something and will try to make a double bottom from which that something was generated. In this case, this could have been generated from this back fractal. It is swept. Therefore, it can be a first up in the double bottom. What is its function? To give the strong movement. what happens? The price reaches the person responsible for removing said responsible person and fails to open that door. As I tell him, I start to hold myself there. Of this comes and sweeps a wolf to see if with that I already have enough liquidity to embrace continuity. What can I do in this moment, at the moment, in which this candle is developing upwards? Sell, stop here, below a few ticks, below the low, would be ideal, in such a way that if this sweep, this rejection, and this double bottom fails to take the high, and instead the price falls again, what does this mean to me? That the bullish is failing to fulfill its function, and therefore the bearish is gaining strength. The way I emphasize that video of function fulfillment for an understanding of a narrative. See how this makes life easier for you without me having to come and guess. Where is the market going to go? Will it go up? Will it go down? No. I am reading that it is fulfilling its function and that it is failing starting from the tabs of a valid area that it is waiting for. So everything is step by step. First, I have an area, I have a higher time frame narrative, I already located where I am and what I could be looking for. Okay, I got a first confirmation, perfect. Okay, it gave me the first up with a continuation. Now, what will be the point where I'm going to consider an entry? In the sweep of the first up, that's where I activate my order flow reading mode, using price function to comply. Alright, so this goes here. The trade didn't take all of this. Honestly, I am not a runner. I am a scalper. But it was a good trade. So, first setup, see everything that's behind a simple trade. Now this that happened here. Now that I remember. This that happened here. In which video do I mention this strong movement and then sweep that and see that the same thing happened here? The price does this. Then a stronger movement comes to touch something and takes all that to come here. Takes out almost all the internal lows and makes that double bottom attempt. And see that the same thing happened here. Makes a strong move at the end, comes to take out almost everything, and then makes the double top. In which video did I mention this to you? Market review that I just sent you. The last one I sent in this price action here. Look, with news included. Everything included. I think that even here, there was also another news at 10. A quick low impact news. But look how everything is so similar. And there I was explaining to you. Well, I swallowed an ad here. Watch it, that review, because I was explaining there what happened. When the market did these kinds of things, that it makes a small trend, not very strong. It just takes out the previous low, pullback, previous low, pullback, until it makes a stronger move. Here, this happened. You have to understand it. And I mentioned it to you. I mentioned it precisely in that review. So, the price comes and makes this strong move. That's when it induces sales, because there are a lot of people waiting for the breakout, the momentum to start going into sales, with a lot of people with, let's say, I don't want to say lack of knowledge, but we have to tell the truth. Whoever pursues this doesn't really understand how the market structure develops. And of course, that generates liquidity. It comes and takes all those trail stops, and it reaches the point where that positioning begins. Look at these candles. Here there's a positioning that takes out this positioning. So you see how I use all the concepts I explain to you in the playlist. Everything can be explained under the same thing. And it comes to take all that out. They finish filling the orders that were left here. They've already taken market liquidity, and now the good move happens. Then over here, look at the price it left. A single responsible party, a single contrary candle. This is in 5 seconds. All this imbalance filled. You know that a move with many consecutive candles from the same direction is an imbalance of greater temporality. The entire imbalance was filled to come and tap that responsible one for having removed the order flow area that was here. The area that was holding the price with this possible double bottom tap, right? It was removed from there, so it's responsible for something, changing the order flow. You know, it's not just someone responsible for breaking. It's not just someone responsible for a swing. It's understanding why I call that area a responsibility, knowing that something caused it. It's not just, it broke me, checkmate, done. The responsible party broke it, and I grabbed the other responsible one. Don't make everything so mechanical. Understand where the positioning point is. Understand when it's already a potential reverse, when something has already been touched. And, well, over here we go to the other part now. Yes, that was the first great setup of the day. Well, from what I saw, market-wise, I don't know who else traded here, what else they found. And over here, we will see this other thing. The fall happens, and I see that the price starts to react over here. For me, still nothing of importance, because this area that it reacted to here is generated after this origin, okay? And when this high flips, it comes and mitigates practically this entire area here. When this happens, I think it's here. When this happens, I no longer like that flip area, because it is almost completely mitigated, and this second area here for me is nothing, just that pullback that came to this area to mitigate almost all of it. So, when these kind of things happen, for me, that's already a weak area and a potential target. So, when I see that it was not reacting to anything important, I reconsider. A continuity which I was mentioning. So when the price starts building up after a strong movement, what is the price generally waiting for? Liquidity, closing of an imbalance, and then it's going to overcome that too. Continue now that the 1 minute imbalance had already formed after the closing of this candle here at this point. So if the price, instead of coming in the next candle to swipe the high to touch the imbalance and continue, stays accumulating for a longer time. Since I'm already thinking that I have to be waiting for the closing of another imbalance that is being generated, so in this case, I already had 2 imbalances. The 1 minute one, with its touches at 50% perfectly, I keep increasing the time frame. These are the time frames I mostly stick to during the whole day. I only check the 4-hour and daily ones at the end of the day and all that. And here's the 5-minute imbalance. Well, I'm going to show you in TradingView. Since this platform with an account Rhythmic doesn't provide data when the market is closed, And it doesn't let me switch to the mini contract, which is another thing. Sometimes mini shows things and micro doesn't, and vice versa. But I usually look at all the suites in mini on another monitor. I leave micro just for trading sometimes. So, look, here the 5-minute one is generated. And this is taken out and the tap is made, while in micro it didn't happen until the next candle to this one. But I entered in this candle, so I want to clarify that since I was looking at the mini chart here, I saw that sweep. Here you can see that I also mentioned in the last review regarding imbalances that the market has two sensitive reaction points to imbalances. The swing of the candle before touching it and its 50%. Those are my 2 points of interest when touching an imbalance. So, what did I get here? I got the price respecting the 50% of the 1 minute, and meanwhile, this bearish candle that you see here in the mini contract was the one that swept this havoc to touch the 5-minute imbalance. Look how the time is at 11:05. So this candle opened and it touched that, and from there, the movement has already happened. And here, you can start to see something similar to the theory of just now. The price takes me out, takes out this low. So what do I have here? The candlestick pattern with which the price has been doing this, then this, then this. Then it pulls me out of the low and comes to test the flip area. And there, it pulls me out of that low again. There's the flip. Okay, so this is separate. There's the flip. And in 5 seconds, this is the low of that flip area. This one here. So, what am I doing here? Same as what I explained above, the price of coming will make me do a sweep. It will give me a double bottom possibility. The 1 minute flip is already done. So there's a candle pattern. Despite this, not looking like a structure in 5 seconds. That's why I'm always validating how everything looks in 1 minute. And here, the sweeps happen, and instead of making some kind of double bottom tap, the price makes a strong move and fails to fulfill that bullish function. Here's the tap of this small fractal and the double bottom sweeping the first tap. What's the function of that? Giving the strong move, it didn't do it. I entered the market here actually. I didn't enter with a sell stop here. I entered the market here because it was going to be a trade that I was going to let run. So I'm not interested in scalping like in the other account where I do scalp minis. So I am more aggressive with orders there. But in this one, I simply entered and protected myself up here with about 20 points. 20 was around here. And I took TP here at 50% of this origin. That was my TP. Here, I see that the price takes time to develop the idea. But simply when you have clarity on those magnets of whatever has been left unmitigated, it will get there. So no need to be impatient with this. The price will do it. And when you start to see these movements, Like all bullish things are failing, the price is sweeping them, rejecting them, not going to take the highs. So for me, that's a sign of bearish order flow. So I feel confident as the trade develops that it will happen. A new logo, body close above the high. Well then, it leaves us with the responsible party, and at the same time, it leaves us generated from a fractal area behind him. For those who remember that I mentioned in a video, also from the playlist, that the price can swipe. A responsible party, if it is generated through, if it is generated from an area behind him, here, it is swiped by a tick. The price comes, and here it is rejected again from this high, and there, it does give us displacement. So now it's the trade I took on the third. Well, the third company I'm currently dealing with. We extend this, and what happens again? See how the price makes everything nice. It gives us a first tap to give us the continuation. Well, these mitigations were small, like the other one up here, were inducement. So when the price does this to me, and I know I have a responsible to take out a responsible. The first goal I have is those hikes that halfway enter the zone and left. In fact, this setup here is one that I show you as an example of sweeps within responsibles in the execution videos. When the price leaves me, a responsible leaves me a small hike here, and then it goes, and then go back immediately to swipe that, and then if the movement happens, what's up with that? I'm mentioning it so you know that this area is a trap area, that this area is not part of the structure, that this area is an inducement that will be taken out both above and below again. So you never consider these areas generated after something important, as part of the structure, or a flip, because here, the people who get this high, apart from rejection, and if they are very mechanized with the flips, it will make a long from here. So we have that tap, and a continuation. Well, now what happens here? Here, it already touches the 30. And it comes and takes the low. So pay close attention to this part. This happened a lot. Also when you are too focused on what you are doing. You are probably thinking that you missed an area here to make a short trade. And you forgot that the price just hit here, and you missed this. And the moment the price is moving like this, with such a bullish order flow, the first thing you're thinking about is making a short from around here. But you forgot that it comes from a rejection on both the 1 minute and 5 second charts. And you also forgot that you were waiting a while ago around here. And that's when the price takes you out with a stop, while you're trying to make a premature short. Then you realize that now the price reached where you were waiting. And that's when the setup happens. So look how the price comes to give you a tap to continue, which in this case is a rejection. But at that moment, the rejection happens, and it starts to go. It fails to make a new low, comes to the area, swipes the first failure, tries with a double top, fails again until it takes out the high so it flips, and someone becomes responsible for taking out the high, fails to break it, and keeps going. You see how much bullish order flow there's here. There are at least 3 bullish order flow signs here in this zone. Then the price rejects that and tells you that this high is in danger of setup tap, tries double top, fails, flips, and keeps going. So then the market comes around here, and I've mentioned this in my Discord too. What does the price do when it's making this type of accumulation? I don't want to get into an accumulation because the price is going to do a sweep or push strongly in one direction, which is an inducement. And there, it will make a potential reversal. This happens a lot. It's like an MD. From there, I made it nice. Here was the other trade. From this point, the person responsible moved something here then. Yeah, good. Then the price comes, it tests me at that, tries a reaction. Then this fractal comes already and starts giving me the continuation, and here it surpasses the first up. And then the strong movement happens. So look how the price starts to be making flips here. You start making continuations, then flips again. So these are points where people want to get into everything, but they lose the location they had in price and the areas of real importance. So never forget where that positioning starts to happen. And from there, set an alert on the first up or whatever, but wait for your setup to form from there. So those were the 3 setups of the day. Obviously there were many more, but it's a series that I want to bring you of everything that lies behind some of the tops and, well, trying out this new platform as well, which is spectacular. So later on, I might be talking to you more in detail about them. And well, from there, all this strong movement happened. Oh well. I forgot to mention to you that I had told someone here who had taken TPK, but that it was already like 100 points below the target I had in the day with those shorts. As I was saying, for me, this first reaction area here wasn't important. I know that Asia starts to climb from an area here. This is the load of Asia, and it's from where this set of bullies begins, because the market closed the previous day around here, and then it fell to an area around here, and from there, the whole setup begins well, right? To the area where the stock market closes. There the price reached. Look, it's actually like someone responsible for something around here. And then it starts to go. So my target was Asia's load. It was like 100 points, I think, from around here. Yes, almost exactly. The 100 points. It was the sweep of that and finishing touching it, like the other level, to the area from which this potential setup had been given there, around here. This 50, then the setup from the imbalances, started from over there, and the target gave more or less that, about 100 points from over there, from where this started. So look, it's important to be situated in the market. It's not about blindly taking setups, it's about building a narrative. See where I am, see what I have in the other direction. Am I touching something valid? Do I have reasons to go the other way? Only then do I start looking for setups. A super clear setup, super clear setup, super clear setup. So, I hope this type of video helps you a lot. I know very few people take the time to explain everything that goes on behind a simple straight action, but they go and post a screenshot of a winning trade, but they can't back it up with consistent information. So that's the idea of what I'm gonna do with